time now for Shane Obata's top picks. Number one on this day is Nvidia, ticker symbol NVDA on the NASDAQ. Shane.
It's had a great year, but it's currently pulling back a little bit. But we think that, as I said before, the Q4 should be good for technology. I think investors want to have exposure to some of the momentum leaders, technology industrials, and then you also, I think, dividend growth as a style will also work. So combination of both. Nvidia, I don't think needs any more introduction at this point. First and foremost beneficiary of the AI investment cycle. The stock is actually, we're more comfortable with the valuation now than we were before the blowout quarter that they had before. Earnings expectations were ratcheted higher, but we think this is just the beginning of the earnings upgrade cycle for the company. They report at the end of August, and we still think that numbers are too low for 2023 and 2024. Anecdotally, we're hearing from different people that it's very difficult to secure the top-of-the-line NVIDIA chips that are used for artificial intelligence applications. For example, companies are saying that if you're planning to deploy, then it should be Q2, Q3 into next year. The demand is there for sure, and we don't see this petering off anytime soon. So I think this pullback is a buying opportunity.
Okay. Nvidia, top pick number one. Top pick number two is in the luxury segment, LVMH, often referred to as Louis Vuitton. Why do you like this one?
Global leader in luxury and what we think is the best portfolio of brands in the world across various segments. So the recent quarter was a little bit weak on the wines and spirits side, but we like this business. It's very resilient. They're diversified across all their different brands. They're diversified across all their business segments, wines and spirits, jewelry, fashion and leather goods being the profit engine here. And similar to what we were saying about trying to think of the other side of things, maybe there's upside to estimates over the course of the next year, and that I don't think the higher end consumer has been under that much pressure. And so as we can move from a mentality of a potential economic deceleration to one of economic acceleration, that could actually lift estimates for this company going forward. And I think one thing that also doesn't hurt is China is lifting its ban on group travel to other countries. China's been a slow recovery, as we know, so I think that will help as well. But remains our top pick in luxury.
Is there a threat at all from the proposed merger of Coach, Michael Kors, Kate Spade, Versace, and other brands?
I don't think so. That's a good portfolio of assets, but I think LVMH skews even higher. It's not Hermes level expensive, but Louis Vuitton is it's a lot.
Okay. Top pick number three, Eaton, ticker symbol ETN on the New York Stock Exchange.
Eaton's been a great performer this year. This is mostly an electrical equipment company. So if we think about just the utility space, they're selling products that cover the whole range of from generation to distribution. And part of the reason the company's done so well is because it's U.S.-centric. We've seen a lot more volatile economic data outside of North America, and I think it's fine to stick to lean into that. So this company is a key beneficiary of the electrification theme, electrify everything, if you want to call it that. So we continue to think this is a great place to be within the broader clean power space. And so Eaton recently had a record quarter, and they raised guidance for the year. We think organic growth probably tapers off a little bit next year, but this is a great long-term hold. It's a little bit expensive, trades at a slight premium to the group, but we think it's deserved given that they've shown that they can continuously win contracts.
This company makes industrial products for the commercial and aerospace markets, among other things. Shane, I want to thank you for being here, and I'm sure our viewers do too.
Thanks for having me.